Big news just in, and this one directly affects millions of pensioners across the United Kingdom. On the 28th of September 2025, the Department for Work and Pensions officially confirmed that from the 6th of April 2026, the state pension will rise. This announcement isn't just about figures on a government spreadsheet. It represents hope, reassurance, and a long-awaited sense of relief for those who have endured years of uncertainty, rising bills, and financial hardship. For pensioners, this is more than just an adjustment to income. It's dignity. It's recognition. And it's the government finally saying, "We hear you, and we are standing by you." So, in today's report, I'm breaking down exactly what this increase means, how much extra money pensioners will actually see, why the timing matters so much, and what challenges remain even after this historic boost. Let's begin with the headline. Starting April 2026, the full new state pension will rise by approximately £500 a year. That means if you currently receive the full new state pension, your annual income will climb from just over £11,500 to nearly £12,000. Broken down weekly, that's almost £10 more in your pocket each week, money that could cover groceries, heating, or unexpected costs. And if you're on the basic state pension, the scheme that applies to those who reached retirement age before April 2016, you too will benefit from a meaningful uplift. The DWP was very clear in its statement: pensioners will not need to lift a finger. There are no forms, no phone calls, no extra applications. Payments will be adjusted automatically. All you need to do is wait for April 2026 and the new figures will appear in your bank account. Why is this rise so significant? To answer that, we need to look back at the struggles pensioners have faced in recent years. Between 2021 and 2024, living costs exploded in ways the UK hadn't seen in decades. Food inflation peaked at a staggering 17% in 2022. Gas and electricity bills more than doubled compared to pre-pandemic levels. Everyday essentials from bread and milk to bus fares and prescriptions rose sharply. For working-age people, there were at least options. Extra shifts, career changes, side jobs. But for pensioners, incomes were fixed. They couldn't simply earn more. And so, many were left facing heartbreaking choices: heat or eat. Reports poured in of elderly couples living in a single heated room, older citizens skipping meals, and many pensioners turning to food banks or charities for survival. Against this bleak backdrop, the September 28th announcement offers something powerful: reassurance. It tells pensioners that they are not forgotten and that their financial security remains a national priority. Now, how did we get here? The increase is thanks to the government's commitment to the triple locker guarantee that the state pension rises each year by the highest of inflation, average wage growth, or 2.5%. This mechanism has been politically divisive. Critics argue it's too costly for the Treasury, while supporters insist it is the only way to protect pensioners from poverty. But for pensioners themselves, the triple lock is not a debate. It's survival. It's the difference between scraping by and living with some dignity. By confirming the triple lock remains intact, the government sent a clear message: it values the contributions of older citizens and will honor its promise to protect them in retirement. To understand why this matters, let's look at some examples. Take Margaret, a 75-year-old widow in Leeds. She currently receives the full new state pension. From April 2026, her income will rise by just under £10 a week. That might not sound huge, but for Margaret, it could mean keeping her heating on during the coldest nights, buying an extra bag of groceries, or covering the cost of a prescription without worry. Now consider Brian and June, a retired couple in Bristol who both receive the basic state pension. Together, their household income will rise by nearly £1,000 a year. That could pay for their council tax in full, cover the cost of a new boiler, or allow them to finally take a short seaside holiday, something they haven't done in years. And let's not forget carers like Mrs. Patel, aged 74, who looks after her husband while living on the basic pension. The extra income means fresher food, a little money set aside for emergencies, and above all, peace of mind. The timing of the announcement also matters. Pensioners are staring down another tough winter, with energy prices expected to rise again and global events driving uncertainty in markets. The pension boost won't take effect until April, but the knowledge that help is on the way provides real psychological relief. Experts say people make more confident financial decisions when they know their income is secure and rising. That means pensioners might finally feel able to replace old appliances, insulate their homes, or simply enjoy a warm house without constant fear of bills. The mental comfort of knowing support is guaranteed cannot be underestimated. Of course, not everything is rosy. There's a growing concern known as the tax trap. Because the personal allowance, the amount you can earn before paying income tax, is frozen at £12,570 until 2028, more and more pensioners are being dragged into paying tax on their state pensions. Here's an example: a pensioner receiving the full new state pension plus just £3,000 a year from a small occupational pension will now exceed the tax threshold. That means a portion of their increase will go straight back to the Treasury. Campaigners argue this undermines the benefit of the rise. They are calling on the government to raise the personal allowance in line with pension increases to ensure retirees actually feel the full benefit in their pockets. Why does this matter so much? Because the reality of pensioner poverty in the UK is stark. A survey by Age UK revealed that nearly 4 in 10 pensioners have been cutting back on food shopping. Over a quarter admitted skipping meals in the last winter alone. Many older citizens reported avoiding social activities simply because they couldn't afford them, leading to isolation and loneliness. These are not luxuries being cut back. These are the basics of life. Food, warmth, human contact. Stories like Mr. Thompson, a 78-year-old retired bus driver in Liverpool, illustrate the problem. He has survived winters by keeping the heating off until late November, shivering through cold nights to save money. With the increase, he finally feels he can keep his home warm without as much fear. This is the human impact of the pension rise. It's not about government spreadsheets. It's about dignity, health, and hope. This announcement is also part of a much bigger picture. By 2030, nearly 1 in 5 people in the UK will be aged over 65. That means the importance of pension policy will only grow. Women, in particular, more reliant on the state pension due to historical pay gaps and years spent raising families. For them, this increase represents long overdue fairness. But we also have to face facts. Even with the increase, the full state pension at just under £12,000 a year is still far below what most financial experts say is needed for a comfortable retirement. That's why younger generations need to pay attention. The state pension alone will never be enough. Building savings through workplace pensions, ISAs, or other investments is essential. Today's retirees depend on the system. Tomorrow's retirees must prepare to supplement it. Some critics argue the triple lock and rising pensions are unsustainable. The Office for Budget Responsibility has projected that the annual pension bill could climb to nearly £150 billion by the early 2030s. But supporters counter with a simple truth: pensioners paid into the system for decades through taxes and national insurance. This is not charity. It is their earned right. And beyond fairness, supporting pensioners also makes economic sense. When older citizens can heat their homes, eat well, and stay healthy, there's less strain on the NHS and social services. A stronger pension can mean fewer hospital admissions, less need for emergency support, and healthier communities overall. So what should pensioners do right now? First, don't worry, the increase will come automatically. But this is a good moment to review your finances. Check your national insurance record to ensure you're getting the full pension you're entitled to. Look into whether you qualify for pension credit or housing benefits. Both are underclaimed, and thousands of pensioners miss out on money they could be receiving. Seek advice if you're unsure. Citizens Advice, Age UK, and local councils can all help. Awareness is key too. Many people suffer simply because they don't know what support is available. So, let's wrap this up. The DWP's announcement on September 28, 2025, will go down as a landmark moment. It may not solve every challenge pensioners face, but it delivers something invaluable: reassurance. It restores some balance in the relationship between the government and its older citizens. For retirees, it means dignity. For families, it means knowing their loved ones will have more support. And for the country, it means honoring the contributions of the generation that built Britain, paid taxes, raised families, and kept communities alive for decades. This is more than a financial update. It is a moral statement. It is a recognition that pensioners matter. So, to every pensioner watching this, take comfort, help is on the way. To everyone else, never forget, a stronger pension means a stronger society for us all. If you found this update useful, don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss important updates on pensions, benefits, and financial news that matter to you and your family. Stay informed, stay strong, and as always, thank you for watching.